Hi everyone, it's Samantha Graff from the Graff Group. I apologize for being 3 minutes late to our IG Live. I had to go inspect a condo. So I am just waiting. There is Esty. I will add her now. Oops, wrong one. I am just waiting for Esty to join. There she is.
Hi.
Hey, we're like matchy.
Oh, wow. That's beautiful. Gorgeous.
We're not letting it be, what do they call it, the September Labor Day white. It's cream-ish.
It's cream. It's absolutely cream.
It's creamish. So we're not letting it go.
Love
Uh,
that. Oh my God, that's hilarious.
okay, so I'm going to pull this back a bit. Our topic today is, what did we say exactly? Well, let's
Mortgages, divorce,
exactly. Real
matrimonial home.
and the matrimonial home, exactly. So, we are going to have a conversation about how we're going to start with, because it's top of mind for everybody, where these rates are going. So let's start there. And yes, Jersey wants to be part of the conversation too. Let's start with how we think that the new rates will affect the number, perhaps, of sellers coming to market for a few reasons. So first, Essie, why don't you talk about the rates so that we get everybody on board with where the rates are looking like they're going and why we are addressing this topic.
Amazing. Well, it's been like a year almost. Everyone's saying the rates are coming down, they're coming down, take short term. And now finally the year over year inflation numbers are down and the rates are starting to come down. The predictions of price, like, so the market is priced in another 7 drops before July 2026. That's a significant amount for Canadians. We are more sensitive. These small drops matter to us. And what you're speaking about is consumer expectations. And now they are going to be more bullish because they are in fact physically, like actually coming down. And confidence, as you can probably convey to me, has all of a sudden gone up quite a bit. So yes, it has stoked activity because people believe things are better now that the rates have started to go down.
So what we're finding is that the sellers are becoming a little bit more positive about coming to market. Now, here's the little bit of what is going on with the buyers, though, is that it sounds like, from what I know we've discussed in the past, and most recently I know that a lot of it's been continuing, correct me if I'm wrong, but people are definitely getting pre-approved. So they are doing their homework and they know what they're shopping with.
Mm-hmm.
But I am still finding in certain areas, especially, they are not putting it on paper. In other areas and
Mm-hmm.
certain price ranges, there are multiple offers going on. I mean, I was supposed to show something on Sunday. Offers were supposed to be on Tuesday or Wednesday. I forget the exact date. And I got a email on Friday that their
No?
offer, can you show it in the next hour? No, my people work. And I am not that close to the property.
Yeah.
But the offer was very, very high. I figured, obviously, if they were going to do an offer presentation within 90 minutes, that was a high offer. Now, at the end of the day, it was. It was a 1,199,000 asking, call that 1.2, and
Yes.
it sold for 1,450,000.
So we would put that in the very popular accessible range, right?
Yes, and this was in the Junction area. So trending, that price range, as we just acknowledged too,
Mm-hmm.
is definitely selling.
Mm-hmm.
Where I'm finding people not coming to paper, even when things are aggressively priced.
Yes.
Well, like I would say about 3 million and up is very challenging right now still.
I'm finding that transactions in that zone are happening. They're starting to happen a little bit more because the sellers are being educated by their realtors to the real market and the real expectations. New builds are coming up, I guess I don't know what you call it, like not infills, but like highly renovated homes are coming on in the luxury market. I do see a little bit more than usual now, so maybe that will change. But yeah, it's just what I've been exposed to. Generally, they aren't moving as much, and I would say, what is it, 750 to 1.8 has been not a problem. Yes, because there are so many buyers in that pool. So even if you have a reduced
Exactly.
pool, they still match up with their home. And from what you've told me, it's still very strongly a buyer's market, despite a few more buyers being pre-qualified. But then commensurately, you're also saying that there are a few more listings. So it sounds like the dynamic isn't going to shift anytime soon for people with home changes or divorce. So if someone's divorcing, basically, it's a continued market. The rates are coming down. Yes, buyers are awake and being pre-approved, and that they qualify. The policies are not so hindering that people aren't qualifying for the mortgages, but they were a little bit lower than before. So the condo space is an opportunity. Do you find people who are in family change mode go for condos often? Is that
Yeah.
because that could be a sweet
So,
spot?
so sometimes there's a couple of different scenarios that could happen. So there's something with the term called nesting. So some
Mm-hmm.
people who are going through divorce will keep their family home, assuming they can afford to,
Mm-hmm.
and then they will rent a condo. And typically, as much as they probably wouldn't like to have to commit to 1 year, a lot of condo buildings, just so people are aware, for rentals, unless it's strictly a rental building,
Yeah.
which might then do more short terms.
Mm-hmm.
But typically speaking, they try to not have too many Airbnb in there,
Okay.
and therefore they require a minimum of 1 year lease. Now, let's be real. If you're going through a separation or divorce, it is going to take a year minimally to probably figure out things.
Right.
That's the court system. Even with mediation, things take time. You have a house to figure out. You've got numbers to figure out between kids, support for children, support for significant other,
Mm-hmm.
maybe. There's all sorts of things. We're not going to get into that today.
Mm-hmm.
But
It's transitionary, so it's so basically a 1 year lease is a good amount of time to try the new area, settle out all those
but what
agreements
let me just finish my thought on nesting
on
so people
nesting.
understand this term in case they're not familiar with it. Um, Basically, what it is that the parents move back and forth
Okay.
to this so-called nesting, which is this condo. It allows for them to rent something of minimal size because it's just them, like one spouse at a time. So you can even do a studio and reduce your cost of,
Okay.
right? So
So nesting is necessarily a swap. It's like a
the
swap
kids
position.
remain in the matrimonial home,
Mm-hmm.
and the parents, it's usually a 1 week on, 1 week off situation.
Oh, wow.
And let's say the mother goes to the condo for 1 week, the father stays in the home with the kids, and
Mm-hmm.
then the next week the father goes into the condo and the mother comes back to the matrimonial home. So they're moving that way. It doesn't disrupt the children's lifestyle.
Wow.
So
That's
that's
very 2024. It's oriented around the security of the child. Interesting. Definitely an inconvenience for the parents and definitely a solution to the home, like the semblance of a continued home atmosphere. Wow. And then of course I wouldn't be privy to that because I come into play when they're transacting to buy and need pre-approvals to either buy out the spouse or what can I afford in the future? What am I planning for, right? Given the potential to have to pay or receive parental or spousal support, right?
well, and
So,
that's the key, and that's one of the reasons why people also
mm,
rent
mm,
in the circumstance, because there's a very big unknown. And I personally think it's better to
hmm,
rent for 1 year as opposed to trying to find a Airbnb or a month to month. Give
yeah,
yourself some stability. You're going through a very disruptive foundation, basically, right? Like there is, the foundation is a little rocky.
mm,
If you think about, they say, lily pads, floating, right? And like the frog being one of the spouses is jumping from lily pad to lily pad and they're floating at the same time. So if you do a 1 year lease, at least there's a little bit of a foundation there and you know where you are
mm,
going to be living. You know exactly what it costs. You can keep it down if it's a rental. A lot of people are eager to go out and buy.
yeah,
They can create that stability.
home,
There are a lot of unknowns. So I think it's also important that they come to you and they make sure, like, or get a little bit of an idea of what could they afford
yes,
when they sell the house. Now, of course, they have to speak to Cheryl, Sophie, and I to figure out what their house is worth. And then we work from there. And then obviously you go through the other expenses with them.
yes. Your inputs are value of the home, timelines, the market, like the order of events. Your input is also market rent at times, and then also location and the price point in those locations, right? So if I say all of a sudden it's not a dual income. And interestingly, what you're saying during nesting is that their finances are still merged at that time, it sounds like. And so what I'm trying to do is also mediate the eventual separation of their finances, right? The two parties. So
Yeah.
yes, I will take those inputs and I will give guidance. And a lot of the time people are coming to me now before the separation is finalized because in the agreement, all the financials are therein and you need to calculate future lifestyle before you sign off a lot of the time. So they're asking, what can I afford? Is who is buying out whom? And if there is a challenge with, by the way, there often is, right? When two people
These
separate.
days, more so
Yes.
than ever because of the price of homes, and
Yes.
most likely um, for those who are separating that have been married for even 5 years, but let's do the 10 years and up. Like,
Sure.
say
It's
10
all
years.
melded.
Um, but, like at 10 years and more, they most likely bought their house in a very, very different price range. And then go to the last 5 years,
Yes.
we've seen the rate change, and we're coming into that 5 years of the first like higher rate, the next 3 years, I guess we'd say.
Mm,
We're dealing with a lot of mortgages that are
do.
coming due.
Yes.
And let's maybe clarify that one of the things, just so people are
Mm,
aware, um, is that if it is your primary residence, also known as a matrimonial home, typically, um, and that's another conversation because you can have more than one. But we're just going to talk about this matrimonial home as your primary. Um, in that case, banks are trying to give you a 30-year amortization or they're allowing it instead of the 25 in order to keep people in their home.
sure. If you were to refinance and buy out a spouse, you want to have maximal access to funding, and ratios are involved, your income, your net worth versus what you're asking for. Exactly. So to maximize that, you want the lowest rate. You want to reflect all of your incomes, including child support, anything, child or CCD, everything should be added up towards that. And offering a 30-year amortization, of course, is going to allow you the maximum affordability when that's relevant. And you know, a lot of the time, help is needed from parents, family. It's a family effort to solve that.
Yes, we were dealing with one, remember, where somebody was, they actually sold their house and they wanted to buy new. But because only the house was the only thing that was done deal, shall we say. But here's the thing, you could sell your house.
Yes.
The money is not given
In your hands.
yet.
Yes.
Exactly. And that can take that year or so. So until you figure out the other aspects of the separation agreement, and that becomes finalized, also known as your divorce,
Yes.
then you really know what you are working with.
Yes. And you can, and you were very wise to advise your clients on the risks of taking action before it did fulfill, it did play through, because it's just not worth it. Wait until the things are assured, and then take your steps to obligate to a large purchase, right?
And this client was very eager to literally, like, the house is sold, I want to buy,
I
like,
get it.
said, like 60 days.
Yes.
And I'm like, first of all, you're probably, I mean, you might settle for, because you want this area and you want this, and this. So you might end up settling. When I say settling, not settling their agreement, I meant settling for the place. And I didn't want them to buy it under that headspace. Like, that's just not a good place to buy from. It was a little bit desperate and too eager. Also, in the end, they didn't buy because the allocation of the monies from the house were being held, and there was
that was my reason
on what absolutely. So
in mortgages, 2 months is a day. You need time to settle things. You know, it's funny you were saying about maturations. So yes, obviously condos are a sweet market for people who are ready to transition and buy their own place because they're super on sale. Houses, interestingly, went up. I think in my area was like 35% up over the last 4 years, but in the last year it actually came down 8%. So it's not the worst time. And then interestingly, you're saying about maturations of mortgages. Yes. I was speaking with a PM on the buy side yesterday, and they point out again how 35% of the mortgages are coming due next year. And if you do the simple math, you have 100% of mortgages divided by 5 every year, 20% should be renewing. Kind of makes sense on an average. So 35% obviously is more. Many more mortgages are coming to maturity next year. Yay for me, for my work, right? I'll be able to help advise and help people get the lowest rate. But from your perspective, you are also on timelines and you're advising them when to sell, it's very careful. I see what you're doing. So if people could save 30, 40,000 by happening to transition the home after a separation when their mortgage is already maturing, then you don't have the risk of who's going to carry the mortgage. Do we pay a 30, 40,000 penalty? And saving them 30, 40,000, it may not change their entire lives, but it certainly matters when you're looking at timing.
Absolutely. Because it's that 30 or 40 that can make or break the deal, right? It just is.
Yes.
There's a walk away number, and 30 or 40, it's still something. And I do agree that timing in general in the real estate market is super important. I always say there's 3 things that you consider when you're selling your home: timing, the way your home looks, and the price. Those are your top 3.
Yes, and in my case, the more documents, the lower the rate, right?
So whenever I say that, people say location, you miss location. I'm like, location matters, don't get me wrong, but these are things you can't change your location, right? These are things we can manipulate a little, like we can play with them.
So
Manipulate didn't sound
location is
very
a,
nice or
yeah, location is
positive,
a
but
criteria, but those things are strategies. Yes.
yes, exactly. Exactly. So now factor in on top of timing being one of the top three, in my
Mm-hmm.
opinion, influencers or things we can strategize with. Now you add another layer of divorce to it,
Right.
right? So
Yes.
you
And you're
want to
saying
and look, let's be real. There's going to be somebody who wants to sell the house, and there's going to be somebody who doesn't. That's very common, um,
mm-hmm.
in these situations. So, one person, the timing is going to be right for, and another person, the timing's not going to be right for.
Very
So, you
true.
have to learn to navigate that as well.
The sooner they reach out to me, the better. Why? Because my tools are documents and time. It is not like it used to be, where everything is steady, and then once a quarter we change rates. No, the rates are in flux. It is much more sensitive for brokers, especially banks. They kind of set it and forget it. But I have to watch to make sure my clients are getting the best between organization phase and closing phase. The longer I have, the more likely that the clients in this transition who are trying to time all these things will get the best rate. So
Mm,
if I know it's coming next April and we start now, I'll know exactly which date I can start holding bond like rates that they can actually manifest. So 4 months before, right? So so basically, yes, timing everything. Don't be afraid to involve me in the conversation earlier because then I can start to hold rates. The other thing is with you is when there's bridge financing and there's two people selling, which are not the same people that are going to be on the new home, right? So you have ex-spouses selling a home, and then what if
and
they
then
need,
going their separate ways,
yeah, and
right?
they buy a new place and they need bridge financing. Remember, there's another person on there who's not an agreeable party
Right.
sometimes.
Right,
Like
right, right.
that
For
can affect
right,
bridging.
right.
What
Yeah.
other nuances come about with timing, do you think? I'm trying to think.
For timing, I would also
Hmm.
say that a lot of the cases, and this might not be just to exclusive to divorce, but the children and school years.
Okay.
Um,
Yep.
And if they're changing school districts through this move, which they usually do not, they try very hard not to. But there's could be a parent that wants to switch into a different area. So, and also like their approval rate is going
Hmm.
to be different in this situation because perhaps one person in the couple is, the person who works and somebody was staying home with the kids. That's going to be a huge issue with their approval because they used to have somebody sign off on it,
It's
right?
different. It's a different income scenario, of
And
course. What was Steve?
it also will depend if both names were on title or not.
Exactly. Steve was saying something about the also you can't screw up. You can't choose the wrong home and buy the wrong home because if you then move to sell, you have to sell it after a year.
Sorry, no.
What
Yeah,
was he saying?
so that's the new, what you're referring to there is there's a new
Flip
law
tax.
regarding flipping
Mm-hmm.
and
Mm-hmm.
taxes.
Mm-hmm.
So that's something that definitely comes into play here, but I think it's something that we agreed that that's something we need to discuss with either a tax lawyer and or a financial planner advisor to be
Yes.
sure of all the legal and maybe even a real estate lawyer in there too, just to be sure of things.
Yes, and all these conversations, I do notice that there is definitely a family lawyer involved who has a little bit of knowledge on real estate, typically just
Yeah.
because of the experience. And then you'll have the agents. So you need senior agents who know their business and know all of that, because to think of those extra things. And then for me, I'm always going to ask those questions. Of course, always refer to like the accountant, but there also has to be, I've often asked them to call their accountant about XYZ and the taxation there. And because if they were to buy something and then go to sell, it's fine. There's probably not a lot of gains in 1 year, but you just have to be mindful of all the new policies as well, and
Absolutely.
taxation rules.
Absolutely. So let's leave off with reminding and encouraging those who are considering whether they're going through a divorce or not right now, separation, but if your mortgage is coming due in the next year, even, it would be a really good idea to reach out to SD to start your process, just as she mentioned, so that she can watch basically the ticker. It's almost like a stock,
Yeah.
market here, and watch the rates for you over the next 10 to 12 months and see where is the best time to either lock in, and or we didn't really touch upon it this IG live, but the versus the variable, because that might be another route.
Oh, right. We do have to discuss that. You know what I
Yeah.
want to leave everyone with? That there's something else that's kind of glaring here, is that when you're in transition, call Sam to value. At all these positions, value the home, document it properly. You're going to need those valuations
Yes, absolutely.
for
So on
taxation and
that
moving forward.
note, we will leave you, and we will see everybody next Tuesday at 1 o'clock.
Looking
All
forward.
right. Thanks for your time, Esty, and your knowledge and your experience. We always appreciate it.
Thank
Have
you.
a good
Always
one.
great to chat. Take care.
Bye.
Bye.